So then we fast forward to early this year. So remember, we've only had one of these 80-day VTL down crosses once a year. We've already had one in 2025, and it was early, very early, because this cycle, this post-Trump election victory cycle, this rally was the worst, I believe, one of the worst in any crypto bull market, and certainly the worst in this bull market. In other words, normally after these 320-day cycle consolidation phases ended, we used to have about a 6-month rally, and prices would rally by about 100%. This time, prices broke out from about 70,000 and only went up to 100,000. So a 50% rally, the weakest so far. Not only that, the rally itself didn't last very long. I'm not going to go into exactly how long it lasted because you've probably seen me do this before. But if not, just know that before this Q4 2024 rally, when Bitcoin broke out from these 320-day cycle corrections, it would rally for about 6 months. This time it went from November through to, honestly, it topped out in the middle of December. So it was about 45 days. For some altcoins, the rally extended a little further into Trump's inauguration on January 20th. I keep bringing him up because it's all about Trump when Trump is president, it seems like. So whatever he's doing, that's what all markets are reacting to. So when Trump is inaugurated, we have this spike top on January 20th. That acted as the all-time high. From there, prices crossed below the VTL. Again, the 80-day VTL. This to me was a little worrying, and I believe I highlighted that. I mean, I kept highlighting it after it happened, of course, but ahead of it happening, I did warn that we really shouldn't be seeing this because we've only been rallying. Really, the breakout has only taken place. So the rally has only lasted for about, if you want to be strict, only about 45 days. And we're already crossing below the 80-day low VTL. That is a weak rally, not what you would expect. Prices are only up 50%. We should have expected a rally of 100%. So it should have gone up, with air quotes, should have gone up 100% at least, should have been rallying for at least 3 months after the breakout. We got none of that. So the rally was halved. It was halved both in terms of price and time. We got half the time, half the price appreciation. Not good, very weak. Now, back then I said, okay, you can have a weak cycle within a bull market. So this was early to be crossing the low VTL, very early. And now fast forward to now, and we have this. So we have this breakout here. We have the low VTL already confirmed. This is already confirmed. I'm just going to leave these black arrows highlighting 80-day highs and lows. There we go. So we have the high here on May. We have the low in June. That's a perfect, clean 80-day cycle. Nothing to see so far. However, I can't help but notice that we have an 80-day cycle completed between this low here in April 7th, and then the low here on June 22nd. And look how close prices are from breaking below the VTL. You know what that means? I just showed you exactly what it means. Every time this cycle that this has happened, Bitcoin stalled. It stalled for months. And we're close. We haven't crossed below it. However, we were also close back here in late January. And I was already highlighting it because it was, I will say the January pattern was far worse because we have this new impulse wave, if you want to call it that. We have this new rally starting in early January, and we failed to break to new highs. So we're making a double top on the 80-day cycle. First time that's ever happened, actually. There are no double tops on Bitcoin's 80-day cycle that led to a correction. So that pattern, up until recently, had never happened before. But here it is, it happened. And by the way, score 1 for Hurst's model because even though this has never happened in Bitcoin before, we can see it in the model. And we know that it's probably not a good sign. So how is that different today? Well, what's different now is that we did rally to new all-time highs. And yes, this is a key difference. So what I noticed in my testing is that if Bitcoin is going to cross below its 80-day cycle VTL, it matters whether or not it just made a new high or whether it's making a lower high or a double top. Let me show you what I mean by that. So in this case, between January and December, so between December last year and January of this year, we have a double top. And on a closing basis, it's actually a slightly lower high. And then we're crossing the VTL. Normally that leads to this type of correction. So we're making a lower high, and then we cross the VTL, or a double top, then we cross the VTL. That's quite negative. We saw the same thing in 2024. We were crossing below the VTL, and we're making a lower high. So these are the 280-day cycle tops. Ahead of that crossing, we have this one here in March and another one here in June. And notice that the June high is lower than March high. That leads to this type of correction, just like it did in Q2 of this year. However, in 2023, we have technically, it's technically a double. It's not really technically a double top. It's technically a high high. It does matter. The July high here is higher than the April high here, and this is a VTL. And normally those lead to this type of correction where it just goes sideways for a while. The market needs a pause, it needs a breather, and then it breaks out. So these are not as bad. Now, technically, the way I play these is that when Bitcoin breaks below the 80-day low VTL and after making a lower high, I will sell part of my holdings and just buy puts for the rest. And if it breaks the 80-day cycle low, which in this case was right there, happened on July 3rd, I just sell out of my holdings. However, if it breaks the VTL after making a higher high, like what happened here, I'll do a put spread. I might do a put spread. A put spread, for those of you who don't know, you just buy some puts and then you sell puts further out of the money as a means to pay less, basically. And as soon as you have a bit of follow through on the downside, you sell your put spread, collect the credit, and that acts as your hedge. So it's a weaker hedge. But normally, if Bitcoin breaks the low VTL after making a higher high, I put up a weak hedge. If Bitcoin, on the other hand, is crossing below the VTL and it's making a lower high, I will sell part of my holdings. I'll put up a stronger hedge. I'll buy puts that are very close to the money. I just want to be either out of the market or fully hedged. So these are a little worse. I'm only bringing that up because right now it looks like Bitcoin is on its way to breaking below the VTL, but it did make a higher high. So let's give Bitcoin that. It made a higher high. Beyond that, crossing all of these VTLs once, twice a year is very unprecedented. Hasn't happened, actually. It has not happened before.